Welcome back to the show, everybody. We got a great one lined up for you. I'm telling you, there's a lot happening in crypto, and we got to stay on it. Listen to some of this. 117 million XRP transferred around to large exchanges. We'll get into that. And the Reserve Bank of Australia and digital currency. How about PNC? Remember them? Remember that they're the first RippleNet member in the United States, one of the largest banks? Well, how about this? Remember Coinbase? We'll get into it. Morgan Stanley, one of the largest banks in the U.S. in crypto. Fidelity, a Bitcoin ETF. A war on crypto, and we know we've been following it. Senator Toomey's remarks on Gary Gensler's testimony from yesterday. You're going to like it. And U.S. House Dems want to close a tax loophole, and you're not going to like that for crypto investors. Charles Gasparino is on the scene, diving into the morass of the regulatory nightmare with crypto and market regulators, especially the SEC, and wanting to know the difference between Ripple and Ethereum. Maybe we can help them. And how about this one? Is Flare, the Spark token, about to launch? I've got something for you to say. Someone roll that beautiful intro.
This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at BackupBradleyAbove and everything that we're talking about here today. Market cap is $2.177 trillion. We're up 3.19%. Bitcoin now over 48,000. Ethereum over 3,500. Cardano 253. And XRP at 111. We can see some green in the market, but let's not get carried away. We'll see where it goes. 105.92 for the low end of XRP and 112.64 for the upper end of the price range as we sit at 110.96. Let's get into the news. 117 million XRP transferred by several large exchanges. And I'll tell you something. Have been shifted by Binance, Bitfinex, and some other large crypto exchanges. You know, I tell you, I find this really fascinating to me because, you know, we know that XRP is in the middle of a lawsuit, or Ripple is, with the over XRP, the asset. And it just fascinates me that they're moving these large sums of XRP around to these exchanges, for which, not those that were mentioned, but the majority of them, you cannot get it if you're a U.S. retail investor. So this begs the question that everybody's wondering, are we closer than we realize to seeing XRP be relisted on a lot of these exchanges? Let's keep moving, because that is the question. We're going to talk about something else here in a second. Reserve Bank of Australia has posted a job advertisement for a position within the central bank digital currency research team. Now, why do you suppose they did that? What do you suppose they did that for? Remember this? Coinbase partners with leading American bank PNC. Remember that? That was back in, August or April, I think it was. August. Well, I think it was April when that actually went down, though. At any rate, just a short period ago, we had PNC announce that their crypto initiative seeks to offer client exposure to digital assets. And hang with me, you'll see where I'm going here. The bank's crypto interest became evident after putting up a crypto product manager job post. By launching a crypto service, PNC will be the latest and the largest bank to embrace crypto. Previously, NYDIG unveiled a program to help hundreds of U.S. banks embrace Bitcoin this year. Now, understanding this, that in its Q2 shareholder letter, the San Francisco-based exchange Coinbase unveiled that PNC, the fifth largest commercial bank in the U.S., also first U.S. bank to be our first Ripple partner, which happens to be a U.S. bank, right, had jumped on the crypto bandwagon. Coinbase has partnered with PNC alongside other industry leaders, including Elon Musk, SpaceX, and Tesla, Third Point LLC, Wisdom Tree Investments. Now, while Coinbase did not delve into details, a source had previously disclosed that the Pittsburgh-based national bank intends to launch a crypto initiative soon. Wow. I find that interesting, right? Because what do we know recently with Coinbase? Coinbase wanted to launch a lending DeFi platform. And of course, SEC, we all know, said, we're going to sue you if you do that. And they may move forward and sue them anyway, because the SEC has kept the world's greatest secret of what is a security and what isn't a security, and then looks at everybody else like we're the idiot in the room. And that has to stop. Okay, that really does have to stop. And I think we're on our way to getting that done, but it does feel like it'll never end. But at some point it will, because this innovation will flee to other areas of the globe, and it will be successful because this innovation does solve problems. You know, I often tell people, replace the word cryptocurrency with payment network, with the phrase payment network. If your cryptocurrency proves out to be a payment network that is viable, scalable, efficient, secure, right? Then all of those things, then you pretty much probably have something you'll be happy to be invested in. Not financial advice, but certainly some of the parameters I use when I look at these new projects and tokens. Now, with that being said, we know Coinbase has caught heat about the lending platform, but what if we were to see this initiative drop soon with PNC, obviously using Coinbase to offer this to their clients because they don't have an exchange themselves? Do we see PNC, which is on RippleNet, purchase Coinbase? Or some kind of deeper relationship go on than what we know here? It does appear they're going to begin offering it to their clients, as they say, soon. And if they do, you have to wonder, would we see PNC make the play to go ahead and purchase Coinbase, which is a public company now too? I don't know, but stranger things have happened. And if that were to happen, or if this merger were to be even deeper related, couldn't they, in fact, Coinbase, go through PNC to achieve the lending program they want to, DeFi or not, because PNC is in fact a bank? Come on in. Looking right here, it looks like the water's fine. Come on in, says Hall of Famer Michael. Government of Laos has authorized 6 firms to trade and mine cryptocurrencies, ending a ban imposed in 2018. Shout out to Laos. Welcome to the times. I mean, let's get the U.S. up to it. I'm not cracking on them. I mean, they're further ahead than we are right now in some respects. Looking here, I'll tell you who's not confused about any of this is Morgan Stanley, one of the largest banks in the United States, is setting up a new crypto-focused research division. Now, if they're willing to tell us that much, you and I already know they got a lot more going. That's the way this always works. Whatever it is we know, it's like the tip of an actual iceberg, right? And 3/4 of an iceberg is actually underwater, for those that don't know. So, mutual fund giant Fidelity had a WebEx meeting with the United States Securities and Exchange Commission on September 8th to push the approval of its Bitcoin exchange-traded fund, according to a recent filing. Well, this is interesting because Fidelity is partnered with Coinbase. Now, that's an interesting, fun little fact right there compared to what we were talking about with PNC's relationship with Coinbase. And we know where the SEC has been on the issue of ETFs up until now. Will they approve it? Probably not likely. But if they do, I would imagine it's because Fidelity's attached to it. That's such a big brand awareness name, and not because it's just, popular, but because the credibility and accountability would be there to launch an ETF. If something should go wrong, Fidelity would stand behind the product no matter what. This just gets deeper and deeper and deeper, and the war on cryptocurrencies is very real by central banks and regulators, is escalating. And this is a very real thing. And we know this. I mean, we watch this all the time. We watched testimony yesterday, and we're going to have some thoughts on Gary Gensler's testimony. And we're going to hear remarks from Senator Toomey after yesterday's testimony on Squawk Box in just a second. But the thought here is that we know with central banks, we saw Benoit Coyer from the Bank of International Settlements, which is considered the central bank of central banks. And what do we know? We know that he has made a massive call to action for central banks to, in a hurry, get your central bank digital currency built, designed, test piloted, and ready to launch, if not launched, as soon as possible. And the reason for that is because I think we all understand, for one, if we're going to have the ability to take advantage of this new digital realm, this new digital world, this new technology that allows us to move value the way we move emails, we have to be able to have an on and off ramp. And that's what we're talking about here, right? We're talking about the fight of the old guard who doesn't want to acknowledge that versus the people that do. And whether it's a market regulator or a central bank, the reality is they need to go back and look at the early days of the internet and what happened to the music industry and what something like Napster did with digital file sharing, which was a famous or really catchphrase for stealing, right? Digital file sharing of music absolutely watered down and decentralized the music industry business structure and the framework of that entire industry, and it has never been the same since. If banks and regulators do not get it together, whether they like it or not, this technology will go around them. The infamous Jay Clayton even acknowledged that. Looking here, Hall of Famer Bank XRP shows us that it is Senator Toomey talking about yesterday's testimony. And listen to what he says in these remarks, because I tell you, Senator Toomey is straightforward. And I like this kind of person, whether it's a politician or not. Listen to this.
Look, I have to say, Gary Gensler is a very serious guy on these matters. MIT educator, or former professor on some of these things, was teaching classes on this. You're very serious about these issues, too. And yet you don't see.
Yeah, he's very serious, and he is well educated, teaching at MIT and doing all of the work, the necessary work. Former CFTC chairman, worked to help draft the Dodd-Frank Act. Yes, Gary Gensler is a very, very serious, smart guy. He can give you everything except a straight answer.
Eye to eye with some of these issues. You're both people I take seriously, though. What do you fault Gary Gensler on when it comes to some of these things?
Yeah, so if you listen to the exchange that I had with Chairman Gensler yesterday, a big part of it was the fact that the SEC has not laid out clear guidelines on what kinds of cryptocurrencies they view as securities, right? Their regulatory regime is limited to securities and platforms that trade securities. Well, if cryptocurrencies, or at least certain cryptocurrencies, are not securities, then the SEC doesn't currently have legislative authority to regulate them. Now, maybe you can make a case that we ought to change that. We can have that conversation. But here's what concerns me. Chairman Gensler will acknowledge that, say, Bitcoin and Ethereum certainly are not securities. Certainly they look more like commodities. He'll acknowledge that. But then he'll say that stable coins pretty much are securities. But if you ask me, they don't actually meet the test, the legal test for what constitutes a security. So I'm just asking the SEC to provide some clarity. Let us know. Why do you think this is a security? What are the characteristics of a cryptocurrency that make it a security so that people will know? And then let the laws, enforce the laws. Maybe we need to make some changes. I'm not in the camp that thinks that there should never be any kind of regulation over any cryptocurrency. That's not my position at all. But I do think there needs to be transparency and objectivity about what we're doing here. And the SEC is taking enforcement actions without first having laid out how they interpret, how they apply existing securities law to this really, really important and innovative new category of finance.
Absolutely right. And well said, Senator Toomey. You know, that's the problem here. And it's really not so, it is a problem, but it's not so hard, I don't believe, to understand exactly what the play is. The play, I believe, from the SEC is really this. And let's talk about what Charles Gasparino has been doing, because he has been, in the last couple days, really jumping back down into crypto because he covered it years ago, and he's really catching up now to what has been going on in the space. He says what may need to happen with crypto regs is a creation of new separate regulatory agency. It's too much of a gray area now, and SEC is regulating through enforcement, which is always opaque. It's turning out to be like insider trading, which is defined based on who is running the government. And I mean, well said, Charles Gasparino, and we are so glad that you are here, because it is a problem. And the more you dig and look into this stuff, I'm telling you, Charles, you are going to find a real issue almost everywhere. And to that point of Charles's comment, I commented here, and it was to another tweet that he had, but And let me read the other tweet he had. He says, breaking, something crypto mom Hester Peirce recently told me, and it rings very true. Without consistent regulation on cryptocurrencies, SEC will stifle innovation in the U.S. and innovation will move elsewhere as it is doing. In his humble opinion, maybe that's the government's end game to kill the business. I believe, and said to Charles, maybe government and the SEC and Gary Gensler want to declare the majority of crypto as digital asset securities and tuck them in the existing dealer-broker framework of securities for less risk to market regulatory failure. For these new assets, question is, why did Ethereum get a free pass on the ICO though? That's the problem. See, and that's the problem. If Ethereum was treated the same exact way, because they did in fact do an ICO, we've shown it a million times. It is not even up for question. And not one official from the SEC has the integrity or the backbone to answer the question why they overlooked the initial coin offering of Vitalik Buterin and everyone there at Ethereum. If they can answer that and answer it soundly within their framework that they have that they're putting up against everybody else, including Ripple, well, then all of this kind of falls to the ground and goes away, right? But the problem is they're picking winners and losers. That's the problem. And it doesn't stop there, because we got taxes, ladies and gentlemen. And there's your end goal. Yes, market regulatory framework. We need all of that, right? We need to get, agencies back in their own lane. And you know what? Exchanges do need to have oversight. I don't want to see me be on this exchange or that exchange. It doesn't matter what exchange, and have to be, trying to get my cryptos bought or whatever and these digital assets, but not realize that I'm being front run on this platform for a much higher price. If we have regulatory oversight of that, that can be eliminated, or at least make the exchanges held accountable for such things. But I digress. That's the exchanges. And just because, let's say, the SEC were to oversee the exchanges doesn't by default mean that every crypto on the platform is in fact a security, which I really say, with the comments we heard in testimony from Gary Gensler, acknowledging that he believes maybe stable coins are securities, then there's a person here that has a hammer and everything he sees is a nail. And I believe it's much bigger than just wanting to oversee and bring regulatory oversight and investor protection to oversee the exchanges. He wants to make every single thing on the exchange a security, except maybe Bitcoin, for which, there's a lot of questions there, and that's another video, but I digress. But here we see U.S. House Democrats want to close tax loophole for crypto investors, and they're talking specifically in this article about wash sale. The wash sale rule, which prevents taxpayers from claiming losses while still retaining an interest in the asset that caused the losses. Investors can't buy identical securities within 30 days and still deduct the loss from their tax burden. So in other words, they want to shut this door to us because the IRS views digital assets as property. Crypto investors can claim the tax benefit from a capital loss while also immediately buying back the digital asset to capitalize on any price upswings. Look, sometimes you do the news and you're like, it's looking good, people, and I could say here, it is looking good. The things we're talking about are not fun. The things we're talking about seem like they will never have resolution, but they will. We have to stay the course. When you see the things come out, if it's Digital Asset Investor or myself or someone else, and they're putting something out that is sound clips on Twitter or what have you, retweet them, tag your senator, tag your congressman, tag people in market regulatory agencies that you feel need to see this stuff. Because the reality is if we do not keep, and this is obvious from what we've learned up until now, if we do not hold them accountable and let the squeaky wheel get the grease, which is us, we're never going to get it. We're never going to get it. And when we do get it, we're only going to get it the way that they want it. And that, I believe, is something we're not going to like. So keep up the good fight. Don't stop. Keep tweeting. Keep sharing. Keep doing all the things we need to do to keep a light on this thing. Like I said, we've had Rosalind Layton from Forbes. We got now Charles Gasparino chiming in from Fox Business. I mean, let's keep this going, and let's get as many people from even larger institutions and mainstream media platforms talking about this and really digging in and doing the investigative work to figure out how we can get a resolution to this thing, because it may come a lot sooner that way than any other. All right, that's going to do it for me. By the way, before I get out of here, I did promise you I was going to show you something from Flare and Spark Token. So hold on one second here. Let me get this for you. All right, take a look right here at the bottom. This is from I Trust Capital and my account on here. And I just wanted to show you the list of assets. And for the first time, that's the first time I've seen it, Spark Token is now listed in I Trust Capital. By the way, it's the best gold, crypto, silver IRA. The only thing better than buying crypto is buying tax-free crypto, and you can do that on I Trust Capital, but you got to click the link. Here's the other thing, too. Ripple, Uphold, Kraken, and every other thing that's on there, and even Link2 shares. You can get all this stuff on link2.com. Private investing made simple. You got to be accredited. But remember, if you're in another country, you only have to be accredited to the rules in your country. So make sure you hit the button, find out what you need to do, and I'll catch all of you on the next one.